Hey, welcome back to the channel. This is Jason, Certified Financial Planner, host of Fighting Words Financial. And today I wanted to do a little bit of a no hype update on Sofi. That stock has been moving recently. A lot of that is due to a couple of analyst recommendations. Now, I don't put a lot of stock in analyst recommendations and I don't put a lot of stock in price targets, but I did want to give you guys a little bit of an update because there isn't a ton of news out there. But before I get started, I do have to say that Sofi is one of the largest holdings, individual holdings in my portfolio. So I am definitely not unbiased here. And additionally, nothing in this video should be considered as instructions to buy, sell, or hold any security. So the topic of Sofi comes up pretty frequently in my live streams. So I thought I would address some of the more frequent questions in this video. Number one, let's not gloss over the fact that Sofi has gotten a bit hammered in the last couple of months since the merger with IPOE. As is common with many SPACs, selling pressure has been pretty heavy since the merger date, and we've seen a price decline that usually happens in the first 6 to 9 months or so. Now, there are a lot of factors behind this, including a general cooling of the SPAC market, short-term profit motivations, and the end of lockup periods, which is far less impactful than many people think, and a general waning of enthusiasm for all things tech since about February of 2021. But oddly, there seems to be no real SoFi-specific bad news that would have affected the share price in a negative way, with the sole exception of one non-event type of news story in which Sofi agreed to pay $300,000 to the SEC to settle allegations of a conflict of interest. Folks, I've been involved in the financial industry for a long time. This happens all the time in the financial industry, particularly folks that do manage money with some of their own mutual funds or ETFs. It's a regular part of operations in many ways, the paying of small fines and small settlements. This is a non-story, and I don't believe that it had any real effect on the share price. So really, the last few months of Sofi's operations can be actually characterized by the lack of information and the lack of news surrounding the company, which that, my friends, in many ways is a good thing. No news in many cases is good news. Sofi is quietly executing its strategy quite effectively, as reflected in recent earnings. So let's review what's going on in the world of fintech, which is attracting a lot less attention in many ways than other concurrent tech revolutions. So stocks in the fintech sector have absolutely killed it over the last 5 years or so. Square is up 2,100%, PayPal is up 600%, and there are a dozen other players with similar stories. So let's also remember that fintech is not like electric vehicles stocks or genomic stocks. Most investors in fintech stocks expect some healthy degree of revenue growth, a clear path to profitability, and some degree of balance sheet sanity, which is exactly what you see with many of the most popular fintech stocks. Sofi is not an exception to this, right? Sofi started out about a decade ago as a way for people to refinance their student loans, and it's so much more than that now. Even though a large portion of the revenues still come from their lending operations, pretty soon this is not going to be the case any longer. The company has expanded its lending offerings to mortgages, to consumer loans, to credit cards, and to other financial services. The Sofi app features Sofi Money, which is a cash app similar to a bank, and Sofi Invest. The goal of the company is to make Sofi mobile application an all-in-one financial solution for a highly sought-after demographic that they have named the high earners not well served. This is basically them focusing on a slice of the population aged 30 to 45 that makes over $100,000 a year. This slice of the population is probably a lot larger than you realize, despite everyone in the mainstream press telling you that everyone is poor. This also makes up some of the highest profit, lowest effort relationships for any financial institution. Sofi is well aware that financial companies, in many ways, have not figured out how to effectively serve the needs of this group of high-earning young people. The most similar app out there to Sofi is actually Square's Cash App, which just like Sofi has payments, deposits, investing, cryptocurrencies, and other services, but Sofi targets an entirely different demographic currently. But both companies are racing towards those higher profit relationships. SoFi is in the process of trying to get approved to operate as an official bank under the Federal Reserve System. The company recently bought a small bank called Golden Pacific Bank in order to speed up the process of getting a bank charter. Now, this hasn't occurred yet, but at this point, it's just a matter of time. And speaking of time, what's great about this for SoFi is that the timing of this approval will likely turn out to be very fortuitous indeed if the Federal Reserve follows through on their plans to raise interest rates somewhere between 7 and 8 times between now and 2024. If you look at history, financials tend to perform quite well in periods of rising interest rates. For SoFi in particular, this is going to be very, very good. They're going to add the exploitation of interest rate spreads between deposit operations and interest rates that you charge on loans at a really critical point when other revenue sources on their balance sheet or on their income statement are starting to mature for the company. SoFi is going to have a lot more flexibility in using customer deposits to finance loans and capture revenues from both sides of that operation. At present, they don't really do this because their deposit operations are custodianed by a third party that eats up a lot of the potential profits on that end of the transaction. The banking charter is going to help its lending and financial services segments work in tandem or work together. One of those maturing revenue streams that I mentioned earlier is SoFi's technology platform called Galileo. And I'm telling you folks, 5 years from now, 10 years from now, this is probably going to end up being the largest portion of SoFi's revenues. So this is a company that SoFi bought in 2020 for $1.2 billion. And the Galileo technology platform provides an application programming interface for other software services and helps other companies build digital banking products and easily issue credit cards and process payments. It's basically a fintech backbone for companies that want to connect to the financial world. They can do that without having to reinvent the wheel every time. Several of SoFi's business units were already customers of Galileo before the acquisition, and SoFi's management was so impressed by their operations that they plan to heavily market Galileo services and expand internationally over the next couple of years. Growing their lending operations is no longer the story for SoFi. Lending operations grew by a healthy 14% last year, but that alone just doesn't justify the interest I have in this company. And I am looking to see lending operations accelerate again once they get that banking charter. No, it is the growth in financial services in Galileo that is truly impressive and truly the reason that I'm interested in this stock. Now, I covered SoFi's Q2 earnings in an earlier video, but let me quickly recap here. Use of financial products on SoFi's platform is up 243% year over year. That is incredible growth. Financial service revenues hit $17 million for the quarter, significantly up from $2.4 million in the same quarter of 2020, but that only represents a small part of the revenues for the moment. It's a rapidly growing portion of the revenues, rapidly growing portion of an increasingly growing pie, and financial services look to be a bigger driver of overall revenue growth for the company in the future. Now, the growth of the technology platforms in terms of revenue is really important too, and that technology platform already contributes a larger amount to the bottom line of SoFi than you may think. The Galileo platform is now the technology backbone of over 79 million accounts worldwide, and that's up 119% from over a year ago. This sector of the company is quite a bit more mature than appearances would suggest. In the past year, Galileo revenues were $167 million. $69 million of that was profit. Galileo is a high margin business at 41%, and if revenue growth continues along this same path, we may see this sector of the business rapidly eclipse and replace the revenue contribution from student loan operations. Another reason to be bullish on SoFi, of course, is a little harder to quantify, and if you haven't worked in the financial industry, you may not really be aware of this like I am. SoFi recently started a Move Your Money advertising campaign aimed at getting people to abandon their current financial arrangements and, in their words, get your money right with SoFi's products to save, spend, invest, and borrow and protect your money. The advertising budget for this campaign is pretty impressive, and they're planning to air ads for the NFL, college football, and other events with a particular focus on digital and influencer platforms. What's different about this campaign is that SoFi seems to be directly addressing what most financial institutions refuse to address, or they're actually afraid to address. The average customer approval rating for financial institutions is actually less than 33%, meaning that almost everyone has some sort of problem with the financial institution that they use, and yet marketing and advertising doesn't reflect this, because if you point the spotlight on another institution, that spotlight is going to get reflected back on you. No one actually comes out and says, hey, we know your financial institution sucks. We know they don't care about you. Move to ours and we'll do a better job. They don't say that because they don't believe they can actually do a better job. The Move Your Money campaign and SoFi sort of implicitly make that promise here. And they also make the promise of being that all-in-one financial institution. And they offer a range of complementary services like access to career coaching, certified financial planners, and exclusive member events. This is something that most institutions are not offering right now. I'm curious to see where this advertising campaign goes. I'm really curious to see how they address the reality that most people are actually unhappy with their current financial arrangements. And I am extremely curious to see if they are able to overcome this. Research has shown that when it comes to the finances, people don't like to rock the boat, even if most of them are unhappy. 7 out of 10 people postpone major financial decisions, even if there is no benefit to postponing. The Move Your Money to SoFi campaign is supposed to act as a call to action to jolt people out of financial complacency, and I think this is really going to be the hard part. But I'm hopeful that they're going to be able to do this to some degree. All right, folks, that is my latest no hype SoFi update. I tried to present it in the most neutral manner possible, but keep in mind, folks, that this makes up a large portion of my portfolio. I own several thousand shares, so I am in no way unbiased. Once again, not instruction to buy, sell, or hold any security. You have to do your own research, make your own decisions. Feel free to disagree with me in the comments below. I love to hear from you folks. I'll see you next time.